weekly commentary 12. So this week, right, if we look back at the Forex calendar and we just see what we had for the week, we had Monday was pretty dry, right? There was a red folder. Although there's a red folder here, right, your eyes need to go to this, this FOMC and the monetary policy and the official bank rate. This is the main news event that we should have been eyeing up for this week, especially for the pound dollar. Remember what I told you guys. Where is the Forex market? What is the drivers of the Forex market? It's the interest rates. Now, why is it the interest rates? Well, the interest rate, it gives the value of your currency, right? So, quick economic lesson. So there's two definitions for the interest rate. It's either the cost of borrowing. So if you go and try to take a loan out, it's the cost of you borrowing that loan. So you have to pay interest back on that loan, right? And on the other hand, it's also the reward for saving in that currency. Now, we care about the reward for saving in that currency. Now, if the interest rate increases, right, then that currency is going to be valued more. And that's gonna have a straight reprice within the forex market on our charts that we see. The interest rate is the main driver for this market, right? That's why, remember I told you guys about the interest rate differentials. These things are important and they change time to time as well, right? But this, you lot should have, right, from chapter 1, when I spoke about interest rates, you lot should have had your eyes on this news event. Now, how did we trade within the market? So from the last week, right, the weekly commentary, remember we achieved that buy side target right here, and then we're trading in a range. Now, what did I say, right? If I just do this high to this low, let's go on a daily. This high to this low, I had it since the previous weekly commentary. If I just remove these lines, right? So from this low to this high, right? This was our price range that we're caring about. This low, and why is this a low, right? So simple, why is this a low? Is the low of this candle higher or lower? It's higher. Is the low of the next candle higher or lower? It's higher. Therefore, this is a low, right? Same thing with this. The lower one out of these two are the low. Yeah, that's how you find your anchor points for the fib. You find high, the high through is the high of the next candle lower and is the one previous lower, then that's a high. If is this low, well, is the candle's low before it higher and the candle after it is that low higher? If it is, that's a low. Hence why we anchored the fib there. Now put this back there. And what did I say? Well, using the video, the lesson of chapter 2, the last one, the PDA matrix. Remember what we said? We said when we create a short-term high, right? We want to trade back down to at least the equilibrium before trading higher, preferably into some sort of discount array, right? So within our discount arrays, what did we have? We had there's this fair value gap here to trade into, right? There's this mitigation block, right? Before we go lower, there's the order block and the rejection block. Now, doesn't that sound familiar, right? The mitigation block comes before the order block and the rejection block at the low of the price range within this wick. Now, we didn't really get to the 50%. However, we traded into this large imbalance that was caused here, right? This fair value gap from this candle's wick to this candle's wick, the in between here, right? There was only buy side offered, right? So we need to pair it with sell side to rebalance the market at within this price range, within this candle's body. This candle dropped into it. Now, which day was this? The 4th of May, right? The 4th of May was FOMC. Now, we dropped lower and we rebalanced this. This was a very difficult week to trade. The reason being, if I remove this, Thursday created the low of the week, which we don't really expect to see. We want to see it early on in the week. However, remember, you have to remember the context of this week. Going into this week, what did we have? We had FOMC, we had the pound news, we had NFP as well. Those large, significant folders. So, what model do you expect that I touched on last week to unfold? If we go into a 4 hour, box it like that. This is the ICT power of three: accumulation, manipulation, distribution. Now, when you see the consolidation, right? When you see consolidation forming, I want your guys' minds to snap into the power of three: accumulation. Now, knowing where you're in terms of market profile, are you in expansion? Are you in consolidation? Are you in reversal? Knowing that you're in this consolidation, and it was evident by Wednesday that we're in this consolidation, I want you guys to automatically think of the power of three. Because remember, the consolidation, what is the job of the consolidation? To create sentiment within the market, right? It forces buyers and sellers to enter the market at both sides of the consolidation range. Now, we were bullish. Well, I was bullish on the dollar. So where do I want to see the manipulation happen? To the downside and then the distribution to the upside. Now, this is where you frame it. If there is going to be manipulation, where is the likely manipulation to be into? They're going to manipulate into something, right? We know the manipulation is going to take liquidity, sell side liquidity, as we were bullish, so we accept the manipulation to be to the downside, right? But where was the manipulation going to be into? A price array, right? This fair value gap was what the manipulation was into. We rebalanced it. Then you see that Thursday's low, right? There was a raid on Wednesday's low. And it fully closed the imbalance. If we see this candle's low, it's 352. This candle's high, 362. Right? So pretty much fills all of it. Now, when there is a sweep, right? This is called, if I just remove these, if we did not have, so I want you guys to forget that this candle printed and this candle printed. Focus on this candle. When you have a candle like this, and you see that we have not filled the entire fair value gap, when we sweep the low of the day from the previous day, any time frame, I'm just saying the low of the day because this is on the daily chart. This could be any time frame. When we sweep, right, the previous candle, so it could be the 4 hour, it could be the 1 hour, and we go into this, right? We go into here and finish this fair value gap and we close it and we reject off of it. This is called institutional order flow entry drill, and you will hear me abbreviate it into IOFED. This is one of my favorite trading models. And if I were to pick one trading model to trade all the time, it will be the IOFED. Now, let's look at how the 5th of May traded. Let me just delineate all the days first. So that this is going to be Fridays. Let me just do it quickly. Thursday, Wednesday, Tuesday, Monday. Now we care about this, right? You see, when we sweep the previous day low, right? In terms of the midnight day, it doesn't really show it. It shows it happens early because on the market, right, the candle will start from here, right? Because it's from 5 to 5, right, on New York time, but we consider it midnight. When we see, right, on the daily, that sweep into that imbalance, we don't enter straight away. With the institutional order flow entry drill, right, on the higher time frame, when we see this happen, let me go back to it. When we see the sweep on this and the rejection away from it, this is when I get interested within the marketplace. Because why is that an institutional order flow entry drill, right? Where does the name come from? Think of it. The institutional order flow entry drill. What do the market makers do within this market? We deliver liquidity and we rebalance areas of imbalance. Institutional order flow entry drill. Delivering liquidity and rebalancing in one go. That is an institutional order flow entry drill. When we see this, right? When we see this, and it's a clear rejection from after sweeping the low into the fair value gap. We break this high clearly. This is what I teach you guys as the market structure shift. When we break above this high, right? Now, when we break that high, look at this fair value gap. We get close to it and we trade above of it, right? Now, from when you see this high being broken, this is where your anticipatory skills comes into, right? You want to see the retracement. Look at these candles. This one, right? I'm going to teach you guys in a whole different video. You see from here to here, we don't want to expect it to trade back below this. The reason being, this, right, this candle rebalances this entire candle. You see that this was the imbalance? Okay, there's something called a balanced price range. When there is an imbalance, and that imbalance is then filled with another candle that supposedly visually looks like it leaves another imbalance. So an imbalance filling an imbalance per se, like this, that is a balanced price range. And we don't really expect it to trade back into it. So therefore, we cross this out. Where is the next one? Here. Now, if we go to the 15, when we break it, it goes into the discount. This is a liquidity target, and what happens? We trade above it. That institutional order flow entry drill, you guys can back test it, right? I want you guys to see it when there is a sweep on liquidity into the fair value gap. That is one of my favorite trading models, right? Now, that was the DXY. What do we expect to happen on the pound? I'm gonna pause the video right here, right? I'm gonna pause the video right here, and I want you guys, right, go onto your chart and illustrate the power of 3 here. And within the manipulation section of the power of 3, I want you guys to see where the manipulation was into for the pound USD. Pause it now, and I'm gonna show you guys where the manipulation was into. So if you've come back, clear accumulative phase was here. Let's just do this right. Accumulation, the manipulation, and the distribution. Now I'm going to remove these, yeah? So if you got that, well done. Now, if you said that the manipulation was into this fair value gap, well done. And do you see how the framework for this is not complicated? This, you don't want to get involved in this. And if you're asking how to trade the power of 3, well, if it's a higher time frame, like the 4 hour, your interest comes from when the manipulative phase occurs. Now, this is a 4 hour chart. You don't get into here. When we get into the premium, because the manipulation, right? If we draw this bit back, you see how the manipulation, I mean the accumulation is all underneath a the premium, right? And where do we want to short? We wanted to short the pound, right? So whenever we're going to short the pound, we always want to be in some sort of 4 hour, minimum 4 hour discount, I mean premium. Then FOMC trades within into the premium. The premium what? Right? When you're within the premium, you have to do what? You have to find the premium array that we want to trade off of. This fair value gap, right? This fair value gap was the one that we want to trade in. So when price is here, that's where we start to monitor it. Now, if I remove this fib, let's go to, this is the 4th of May. We trade higher above all of these. Now, you would have your 4 hour fair value gap charted out so that when you're on the 15-minute, you know that you're in a 4 hour premium array, the fair value gap. And this is where you stalk price. Yeah, this is where you stalk price. Now here it's very late. We don't really trade into here, right? Now, if I, when we see the trading happening early in the day, I move this back so that you can see this candle, right? When we start trading early in the day, right? This was probably not the easiest trade to catch, but when this low breaks, yeah, and look at the displacement away from the low, right? It's a clear displacement away from the low. We go here. It doesn't get to the optimal trade entry. I don't always have the optimal trade entry. I usually never have the optimal trade entry. I only have the 50% because one of the things is I with the optimal trade entry, I always used to try get in at the the top of the 79, and it used to make me miss a lot of trades. So having just the 50 out and knowing whether you're in premium or discount, it kind of just helps me psychologically just go for the first premium array. not always looking at the numbers of the OTE. If you guys miss a lot of trades with the OTE, I recommend trying this as well. Now look at how when we move lower of this price range, right? Look at this, right? From the displacement away from the fair value gap, if we just anchor the fib. And this, I'm going to start using a lot more fibs now because I've introduced you to the PDA matrix. Look at how price doesn't flirt around the equilibrium for long. You see how we just go in here? Because smart money, they will short and eat up those premiums. If it's a true bearish market, this true displacement here, it doesn't need to get to here. Anything above the premium is a short. Now, where would the best short occur? I expected this candle to get traded into. However, it didn't get to that candle, right? And if I remove this fib, so the high of this candle comes in at, and look here, if you're new, look here, yeah? The high of this candle comes in at 781. The high of this candle comes in at 78. They are equal. One pipette, that's negligible, right? Negligible means we don't have to even consider that, right? It's so insignificant. This, right? And this was the news event that occurred. When the pound interest rate got announced, this was the move, right? Now, you have equal highs before the news event. I want you guys to start considering when there's a news event, right? Or you're looking to trade, always think to yourself, who's in the money? And if they're in the money and there is market structure and internal range, because this, right, from this is the internal, from this price range, from this high to that low, this is internal range. This high is an internal high within this price range. Where do people trail their stop losses? And in the market maker video that I'm going to make, this is something I want to touch on. And the market makers are well aware and they attack the trailed stops. Who's in the money? Because if you short it pound from here to here, a lot of people what they do is they trail their stop loss to each lower high, each lower high, each lower high, each lower high until they get stopped up, which would have happened here. So before the intended move downwards, what would they do? They will remove anyone short. Anyone short that trails their stops above here, especially at these double tops, right? This is a textbook retail short, right? And the algorithm and the people that made this algorithm, they are aware of the traditional retail methods. Double tops is a retail short. We will consider that a significant liquidity pool. Even if it's not a significant liquidity pool, the algorithm is just designed to attack highs off the basis that we assume it doesn't have to, but we assume there is liquidity there because that's how everyone trades, right? So if you're going to attack the double tops, most likely you're clearing out liquidity, right? It wasn't shallow, it was pretty shallow. I wanted to see it move higher into here, and then what happened? One move. There is no way you are gonna get involved in this move, right? Someone tried to short this, and I think they kept getting the common error, which is very normal. Trying to get involved within interest rate moves is very no, it's very very hard because you'll just be getting repriced. I'll tell you a story, right? There was one person that I know, and they were trying to trade. It was I think it was a FOMC or NFP, and it was something similar like this. It was a short, and they're trying to short, they're trying to short, they're trying to short. Common error, and you're not considering it because you're just trying to get into the short, but you're not when you're spamming that button trying to get into the short and it keeps saying common error and then you press short again and sell on the MT4, you're not considering that price is moving as you're trying to get all these common errors. And when he finally got in, guess where he was in? When the sell, he was already in at the bottom. Does that happen? Is that just bad luck? No, it's all intended. The broker doesn't let you get in all the time at these things. And when they finally let you in, they'll reprice you to hell. And then you're in a shitty position, right? An entry that was possible was the 50% retracement back into here. But overall, it was just a very difficult move to participate in because there was one way, right? And that's why we don't get involved within the FMC, right? If you're involved from here, right, and any retracement here, if you got involved right? Because these were equal highs before these equal highs were made, right? So if you got involved in this candle and you placed your stop loss at this high, then you would have enjoyed the meat of this move. If you're trying to trade off of the news, good luck getting in. Good luck getting in. You wouldn't have got in unless you FOMO'd it, and that's what they want. They want you to FOMO it. But the thing is, do you want to risk the FOMO of trading, you just getting in within this big candle? Is it favorable? No, because FOMO doesn't usually end well, does it? Right? Really study this power of three. It's a fractal thing. It happens on all time frames. You will see it a lot on the lower time frames intraday, and it's one of my favorite intraday techniques to get into as well, right? You need your bias before this. Without your bias, you'll be confused. If you had the wrong bias, right, you would think that this was the main move and a retracement back into maybe this breaker order block, and then you'll trade higher, right? And look, you would have thought that this was the move higher, but you need to consider the bias and the higher time frame, right? What was the higher time frame telling us? Clear shorts, and this was the discount fair value gap. Trading is not hard, right? The hard thing is maybe executing because of the emotional attachments that we might get. But in terms of if you want a bread and butter approach, just do this. Find the swing low to swing high. And how would you find it, right? Find the most recent one. Find a move that was significant, that had large displacement, right? So this high to this low was the most recent displacement, right? Draw your fib on it. And you only want to be participating in shorts above the 50%. Now, above the 50%, do what I taught you in the last lesson of chapter 2. Find your price arrays. What's the first one that came up? What do we have here? We have the fair value gap, right? You have the mitigation block, and you have this collectively as one order block, right? So price didn't go to this fair value gap, and we were stalking price here. When it gets into here, we don't just short blindly. You have to wait for your low time frame model to occur, right? Now, if it's not occurring and there's no clear, market shift to the downside within these higher time frame arrays, then you just keep waiting, and it maybe it's going to trade to the next array, and you keep doing that, right? You just wait until you're in your premium and your lower time frame, sorry, and your lower time frame model forms, right? So this weekly commentary, heavily, you could even call this a power of three lesson, to be honest, but don't overshadow it. Whenever you guys are in a consolidation, always consider what you're doing in the market right now. Are we expanding higher like this? Are we expanding higher? Because if you're expanding higher, what are you expanding into? You're going to, every expansion is into some sort of liquidity pool. You're attacking some sort of liquidity. Consolidation, you're just accumulating orders. You don't get involved in the accumulation, right? When you're in accumulation, straight away think that power 3 is at play because it will keep you on side. You see the manipulation and the distribution. When we see the manipulation, you want to see attack on liquidity, preferably higher time frame, sweep of like a previous 4-hour low or maybe a daily low. If it's early in the week, maybe a sweep on the previous week's high or low, depending on if it's bearish or bullish. And you just want to stalk price, right? You want to stalk price and see when your lower time frame model occurs after the manipulation takes place. Now, I don't think I touched on where I believe the DXY is going, so let's do that before we end this. Based off the current order flow, right? We rebalanced this candle, not the entire thing, but we rebalanced it. So what is this open for? This candle, right? This price action, we are still open for possible institutional order flow entry draws. If the next week sweeps this low, fills in more this imbalance and goes higher, that's an institutional order flow entry draw. However, if we go on the daily, we saw that we did have an institutional order flow entry draw, and then what happened? A rejection higher. So let's have the most logical approach, right? Let's do the most logical approach. There was a power of three, and there was manipulation to the downside and distribution to the upside. So it shows that there's willingness to go higher because we used sell side liquidity to fund a move higher, right? Now, adding into the mix of that, we had a bullish institutional order flow entry draw, and we've traded higher since it. So what's likely to happen then? It's likely that we are attacking buy side liquidity. So I want to see us trade above this high of Friday, and I expect us to trade higher. I don't mean it doesn't mean to close higher. Remember, we don't really care about the close of the candle. We care about where it's going to trade because we don't close our positions at the candle's close. We just care about if it's going to go higher because we're not holding our trades for so long. We're in and out within a day at least. So I expect this to be an attack on buy side. This is a draw on liquidity, the high of this. I want to see a clean run above these highs. It's not so clean yet. The first bit of resistance that we might get is from this up close candle. So we want to, 105, and I did say 105 in the previous week as well. I want to see the DXY trade too. So let's see how Monday trades. Hopefully Monday is going to be a small range day. When Monday is a small range day, it's very nice because Tuesday will likely take out Tuesday London session if it's a bullish week. If Monday is a small, so if Monday's a range like this, right? Tuesday, if it's a bullish week, will likely place in the low and then go higher. A power of three. Power of three is so common, and you guys, now that you have your attention to power three, you guys will realize a power three happens very, very often. And it's very important not to be caught off by the power of three as well. The manipulation phase, don't always be caught off by that. Sometimes it gets the best of us. Our bias is wrong. That's completely fine, right? Before I end this video, I want to touch on something. A lot of you guys now, I'm happy to say this, a lot of you guys are comfortable enough and some of you guys are pursuing funding. Some of you guys, hats off, you're funded. A lot of you, right? There's maybe, I think, 5 funded people, if I'm right. 3 to 5 funded people in this mentorship. Alhamdulillah, you guys are smashing it. I'm not gonna name them just because they don't want to be named. They know who they are though. And the guys that are pursuing the funding, I want you guys to hear what I'm saying. Take it slow. You're doing the MFF challenge. Take it slow. There are X amount of days in each phase for a reason. 30 days for 8%. Don't take that first trade until your trade setup comes. The last thing you want to do is trade against the clock in the last dying days of your challenge. Is 8%. If you want, build a buffer with a 0.5%. But if you have back tested yourself with 1% risk, if you have tested everything, right, and you guys are profitable, earning more than 8% from your back test and your demo trading, like some of you have, then whatever you have done on that demo that has worked for you and you've done more than 8%, just do that with the same risk, the same everything you've done on that demo, replicate on the live account. Nothing changes. And sometimes you'll take losses. And you know what? When you lose, just don't even try to get into another trade. That funding challenge, it's not, the hardest, but it's not the easiest either. It's a fair challenge, I'd say. Don't lose your head on that challenge, right? Because those challenges, they cost money, right? I don't know your positions. I don't know if it's a lot of money to you guys, but it's still money. And never ever undervalue, even if it's a few pounds, never undervalue that. Please take your time. There is no rush for the challenges. Only take it if you're ready, right? In terms of the document, I'm going to start the document ASAP. If you guys think I'm longing it out, 4th and the 5th I had exams. You can see I had a 24-hour exam. This exam, this one is very hard. This one I can manage, but nonetheless, those things need revision and, it does take some of my time up. So try to be a bit, not in a rude way, but understanding that I'm going to make that document for you guys. I promise. I've said it. I've always been a man of my word with you guys. If there's ever been a late upload for me, I've always told you guys, hey, it's going to be a late upload. I'm going to get into the, I'm going to do it either very late or I'm going to do it maybe tomorrow. And I've always stuck to my word, and you guys know that. I'm going to get that shit done for you guys. And so my plan is I really want to get the document done by Monday, by Tuesday, I mean, and then I can start chapter 3 on Tuesday as well, right? The main takeaway from this weekly commentary is the power of three, and every theme of the weekly commentary is the same thing, guys. Build your narrative. Keep building that narrative. Don't get lost on the low time frames. Remember, the higher time frame, that is the key. Higher time frame, find in your premium and your discount. Have your overall bias, and just keep waiting for the daily and the 4 hour to be in line with your bias. Whenever you're in those premiums, stalk those lower time frame setups for the shorts. If you're bullish, wait for price to go to a discount on the higher time frame, and on the lower time frame, stalk your setup for the bullish. The rest is psychological. Yeah. So it's kind of crazy. We're going to be done soon as well. It's not going to be too long. But until the next time, and I'll see you guys next week, hopefully.